We're starting to get some of that inflation data that we've been looking for. It is Thursday, December the 18th, and this is Markets with Megan. If you like this podcast, please subscribe, hit the alarm bell, share with friends, family, or even colleagues, anyone who's interested in the economic data, what it means for the market, and what it means for the economy going forward. So today we got a very interesting report for CPI in November, and that's the Consumer Price Index, which is an inflation measure. If you look on a year-over-year basis, it rose 2.7%. The core level rose 2.6%, but there was a lot of noise and disruption from the government data. So there was no month-over-month reading. We only got year-over-year for November. And when we look at what we have, you see food growing about 3% on a year-over-year basis. Energy services, so this is everything that takes heating in your home, 7% on a year-over-year basis. When you look at services, which we call sticky, excluding energy, that rose 3%. So again, above that Fed target. The owner's equivalent rent, which makes up a big part of CPI, that rose 3.4% on a year-over-year basis. Medical services as well, a big part that just strains consumer balance sheets, that rose 3.3%. So these all are still better than expected. The market's celebrating this. They're thinking the Fed will come in and cut in January, but let's just be careful because there was a lot of noise around what kind of government information we didn't get, and we will wait until we get the full December numbers, which we'll get in the middle of January. That's all we have. If you want a history of our podcast, go to marketswithmegan.fm. Thank you.